to kind of break down what's the difference between a DSCR loan versus a hard money loan. Um, you would think, I think for many of us that might be kind of a common thing to like understand, but I think it's important for kind of the average, investor, average person to really just kind of understand what that is. People offered a lot of products, particularly newbies, when they first kind of get into the game. And like I said, I think it's important for people to like, you hear these terms, like, what do they mean? What are they specifically? So and again, I always just like talking about what's going on in the news. So, hey, everybody, Onaje Barnes here, long-term buy and hold real estate investor out of Houston. Do single family, multifamily, short-term rentals, long-term rentals, Section 8. So I do a little bit of this, a little bit of that. That's who I am. Courtney, you want to introduce yourself to the people?
Sure. Courtney Fricky, active real estate investor. I would consider myself a solutions based investor, meaning I seek out more complex situations, but I also specialize in the creative side, especially when it comes to creative financing. Yeah, it's weird to say this, from New Orleans. So I spent half my time in New Orleans, half my time in St. Pete, Florida. Thanks for having me.
How's things going in New Orleans these days? I see my man Luis down there.
Really, really tough go of it for the last few years. And I think while the rest of the like I think we're actually seeing like I actually just sold a property. It was a deal I bought subject to and then I sold it as a flip. And I thought for sure I was gonna get 175 for it. And somehow my broker did a miracle and pulled out 195. And I was
Hey,
just like,
195.
I, yeah, and he moved it relatively, within, under contract within 30 days. And I'm like, all right, all right. Like, so it was one of those things where, I don't know, it was, I was pleasantly surprised,
Was this a
but at the end,
value add? You said it was a flip. Was was it a flip or more of a
it was well,
wholesale
actually,
deal?
really it was a hotel, where
Okay.
I did very little to it. But I bought it subject to stop to foreclosure for a woman. And this was right around the time when I was moving from New Orleans to Florida, and I was actually going to keep it. I was actually going to keep the property, but I said, you know what? I didn't do much, but it's in a good neighborhood, but not necessarily the one like an area I love, but it's a decent area. So let me sell it as like, for example, grandma's house. So like, I didn't update it. I mean, it's sure like when I sold it, it had blue tubs or whatever and toilets, right? So like I didn't go in and update it. I just made it good. Like I serviced the AC. I cleaned up the backyard. I cleaned out the house. I deep cleaned it. Removed all her stuff. Like I did those things and I got it good and lendable. And I did like a checklist of items that would come up in like an inspection and stuff. But and then just priced it low. Like it probably would have been a 230 if you
Oh, nice.
really
So
went
this
over
was a
the top,
legit deal.
like yeah, like legit, like if and I bought it for 117 subject to the loan, and I probably put it was around 12 into it between the clean outs, uh, different things like that. So at the end of the day, it wasn't a bad deal, but so overall, New Orleans, yeah, we've had our fair share of issues. I mean, the insurance crisis, different things, but at the same time, um, there's still some damn good opportunities here.
Oh, that's what's up. Oh, congrats on the deal. And just so
Thanks.
everybody, I mean, you kind of explained it already, but just so everybody can understand, she said hotel, right? So it's kind of like a wholesale and a retail deal in one, where essentially you don't put a whole lot of work in it. She really did the majority of her work you did on the front end on the acquisition side.
Yeah.
Yeah, that's
Yeah, and
phenomenal.
so when I say that, it's basically the idea of a flip where I'm not making it. Um, I'm not necessarily going HGTV with it. And so what I call is I want it clean and lendable. And if you're in real estate and you don't know what I mean by lendable, it's a really important concept. It's this idea of what do the banks require. Generally, I'm talking about FHA, yeah, conventional, but maybe even VA. But like, what are some of the main requirements of the things that would come up? Because a house can be in a certain condition and the lender's going to say, I'm not, a normal FHA, a loan that a home buyer is going to have. At a certain point, a lender is going to say, we're not going to, it changes the nature of the loan if it's too much of a fixer-upper. And so for me, certain times I'll take a property where it's not necessarily a fixer-upper in the sense that it's, got a crack, like a bad foundation or it's gutted or whatever. But it's just, like I said, grandma's house. And if it's got, a decent roof and a decent AC, some of those good bones, what I'll do is I'll just get it clean it up, and lendable, meaning I fix those big items that might be an issue for, a lender inspection, stuff like that, maybe appraisal. And then I list it, aggressively. So I'm not trying at the height of the market for it. But I know that, if someone wants to get in that neighborhood and if they're going to do some of that work themselves, it's a solid option there for some people.
Oh, sorry, I'm sitting up here talking to talking to myself. Appreciate that, Courtney. We're gonna move around and say hello to some of our other friends on the stage. But what I really love, and I think the biggest important thing, if you're trying to sell some real estate, it does need to be lendable. If it's not lendable, if it doesn't have any type of conventional standards, meaning like you're missing a toilet or something, spend the money to get the toilet in there, right? Just so it can be lendable. So today, guys, hey everybody, go ahead and share the room out. Show me a little love. Share the room out. Got some really awesome mods on stage. This is the real estate rush hour. We're trying to do this every week, Monday through just Monday. I keep saying Monday through Friday, but every week, Monday at 6 p.m. And we're just gonna go a hard hour of various little topics, hot and heavy. I got a few. Well, I got not a few, but I've got some really great people on the stage. Miss Real Estate Faith, I believe you are a lender, so this might be up your alley. How are you doing?
Hey, good evening, everyone. I'm good. I didn't even know you do this room. I was just on my phone.
Second weekend, we getting it
Okay.
back. We do it.
I just
It's,
happened to have my phone in my hand trying to send a text, and the alert came up. I was like, "What? This isn't Sunday. What's going on?" so, well, I'm great. I'm glad I came across it. And Courtney's, you're having like some good surprises. Usually, a surprise in real estate is like bad news, but it looks like you really had some good news with that sale. So yeah, good evening, everyone. My name is Faith. I am a lender, real estate, all around real estate development and sales. So I'm a licensed mortgage loan officer, originator. I also work in community development finance and real estate development, for community development. So, um, and my primary market is the DC Metro and Baltimore City.
I'm gonna come right back to you in a second. So when we get this conversation going, I do want to get a couple quick mod intros just so people know who you're talking to and what their credentials are, and then we're gonna bring this right back around. Okay, I see Luis and Cindy might be on the phone. Miss Amy, what's going on? Tell the people about yourself, who you are, what you do.
Hey, Onaje. I am Amy Palvido, longtime real estate investor. I've been investing in real estate since 2008. Um, Before that, I had a construction company. I originally started investing in single family homes and then started investing in multifamily 2 years later. Became a private equity firm owner where I was syndicating deals and I had a real estate fund for a while. I kicking my real estate fund back off, but it's not for single family or multifamily. I'm transitioned into the data center and industrial space, but still an investor. And I also chair the U.S. PropTech Council, which is the trade association for the real estate technology industry in the U.S. And I have a tech startup myself, and that's what I do, man. That's what I do.
A little bit of everything. Renaissance woman, doing the new and the old school. Very knowledgeable. Miss Cindy, I don't know if Cindy, if you're available, to say hello, tell people who you are, what you do, and we're gonna keep going moving quickly into so we can get back to this conversation.
Hi, Onaje. Thanks for hosting the room. I love being amongst all these people that used to be on these clubhouse rooms quite often back in the day. My name is Cindy Byler, real estate investor and military spouse. I have a long-term buy and hold real estate portfolio like near my hometown in upstate New York and PA. I have about 25 doors. And then I also actually own two assisted living facilities in New Orleans. So Courtney and I should hook up. Um, if you know anyone needing assisted living, we offer referral bonuses. Yeah, I'm just here to offer insight and be a sponge. Thanks, Anaje.
Cool, cool, cool. Miss Anna, how's it going, Anna? Anna's still a regular on Clubhouse, I believe. Anna, what's going on?
Yeah, where did you all go? I mean, you left
We
us and
all,
that
you know. I'm sorry, I'm back though. We're back. Miss
that's
RB's been
awesome.
dragging
We
us
all we
back.
all had to take a break.
It did. I did need a break,
I
but
don't blame you. I don't blame
I
you.
know, I know. Maybe all
Uh,
the riffraff is gone, and we can kind of come back and have some good conversation,
oh,
some
there's no
good shit.
riffraff in my room. You need to come. I mean, I only do it once a week, but you need to come into the transparent agent. We don't have riffraff going on there.
Yeah, I know you don't. What, what
Uh,
what what time is that room, by the way? Just so people know.
Thursday, well, not this Thursday because of Thanksgiving, but Thursday morning at 9 a.m. Eastern Standard Time. So,
There we
would
go.
love to have you always. I think you give great information and always dropping some bombs. But I'm Anna Abitamarco. I'm a realtor and certified mentor here in Chester County, Pennsylvania. We're about 40 minutes west of Philly, and I've been selling real estate here for about the last 13 years. And yeah, and that's about it.
There we go. Okay. All right. Hey, and of course, I got to bring it to my co-host of the evening, who is always fashionably, well, not always, but today fashionably late. Miss RB the realtor, what's going on? You know, I got a little shade now. I got to get a little
You
shade.
I don't even understand why you would do me like that because I'm juggling so much. But hi, brother. So I'm RB, licensed real estate broker in the state of New York, buy and hold investor on the residential multifamily side, long term landlord, and also broker owner of Golden Key Real Estate, as well as the founder of the Key Path Foundation, which is all about creating a pathway to financial literacy. So I'm excited to be here and be a part of the conversation and looking forward to these Mondays that we're doing for this 1 hour that we will talk. And it looks like he's on mute, so really quickly, I guess I'll just share that on December 20th, I'm super excited because we're doing a give back to children and families. We're doing a family financial empowerment expo, and it will give financial literacy not only to family on over to four families. So I'm super excited about that and hope that people can come and join us. You can always go onto my Instagram because I don't know if my 10K card is updated, but my Instagram is always up to date. You can go on the link in my bio and it's NYS underscore realtor. Oh, are you there right now?
Okay, so I
Okay.
gotta get back to use the hosting, so I'm tagging and texting and then talking at the same time with my mic not on. So hey, I'm back. Give me a couple of weeks, guys. We'll get right back into the groove. Louise,
Mhm.
if you're available, feel free to jump in. But I'm gonna pass the mic to Miss Faith because she is a lender. I kind of got an idea of these products, but I love having lenders in these rooms when we're actually talking about lending. So just in case we make a little snafu, we get corrected properly. So just high level. right? And again, let me set this up. You know, one of my well, Luis, if you're there, bro, come off your mic. You let people know who you are. You got the you got the emojis going. But so first things first, I wanted to do this room. One of the students in the Wealth Masterminds Academy, we talked about this last night, and we were talking about just ways to scale. And of course, I'm very comfortable with loans and lending and such. And obviously, we got Courtney in here, and she can talk about some ways to not use loans. But she was saying, "Hey, do I got to come keep? I'm gonna run out of these 20% downs." And I'm like, "Well, there's other loan types, but they can be dangerous." And it's important to understand these loan types, the terminologies, what's the difference. And she actually thought a DSCR loan and a hard money loan was the same. They're similar, but not quite. And so, just so I can be clear, Miss Faith, what's the big difference? And as before we get in this conversation, you want to help us define these terms?
Yeah, so from where I sit, the DSCR loan is typically not even going to be a loan that's held in house, at least in my market. And that's where the lender is going to lend based on the property being able to meet the debt service coverage ratio on day one, year one. And that's when they'll take the net operating income, basically the gross income minus expenses, the operating expenses, and divide that by whatever the mortgage is going to be for a year on an annual basis. For most banks, they want that debt service coverage ratio to be a ratio of 1.25, meaning you're breaking even and you at a 0.25 margin. So that's for the DSCR loans. In my market, the hard money is typically for a value add deal. They're basing on what the ARV will be and you being able to meet your business plan, whether that's a fix and flip or a buy and hold and refi out of the hard money. It's very, very temporary. So typically for 12 months, it may or may not have a built in extension. It is considered high cost. Depending on what markets you're in, it may even be considered predatory. And it's typically not securitized. The funds are typically private and held. Who services it is who lent the money. So that's some of the differences, and they're not particularly looking at the property to meet any type of debt service coverage ratio. They're just looking at, hey, if this person didn't pay, would there be enough meat on the bones for us to foreclose and recoup our losses, and also to make money on that high interest. So that's kind of like the differences from where I sit.
Yeah, and I appreciate you kind of giving that summary. A couple things I like to kind of just dig down, just starting with the SCR loan. Just understanding what those words mean. Let's break it down again. Debt service, meaning the bank wants you to be able to service their debt, meaning pay your bill, right? Coverage, meaning can you cover that debt? And at a ratio, right? A ratio that I like to kind of view it as a as a multiplier, as a cushion, right? Meaning, can you cover this loan with a cushion? In the example that Faith gave of 1.25, they're basically saying, can you cover this loan plus 25%? So, in simple terms, if you have $1,000 loan or $1,000 mortgage, can you make $1,250? Okay. What's up, my man KZ? Can you make $1,250? That's kind of the cushion that they're looking for. So if you have a lower DSCR ratio, that means that bank might be a little bit more risky, or they believe in you as a borrower to where they feeling like they can give a little bit more risk. If they're higher, let's say a 135, then they're probably saying, hey, maybe this situation looks risky to them. And therefore, we have to raise the standards a little bit to, let's say, 1350 in the same scenario. Ironically, I'm getting a DSCR blanket loan right now, and it's at a 1.1, which, you know, the bank is a little bit more risk averse, risk tolerant, and obviously they probably believe in me being able to raise some rents, et cetera, et cetera. So, you know, I like to kind of give that little context to it. Joe T kind of put in the text like, "Hey, are these hard money loans? Are these, um, you know, what's the difference between, you know, are they the same? Are they similar?" I look at DSCR loans, and people kind of look at them as loans, but I just look at that as when a lender is looking to lend in an income producing capacity, that's the situation, that's the ratio, that's the definition on how they want to look at it. A hard money loan, like Faith kind of described, you're talking temporary money. And I think that's super important. When you really talking about hard money loans, they're hard. Okay. That means they tough. They might hurt a little bit. And it's important to me to I keep the definition of temporary. It's temporary financing that you need to get out of long term because it can be quite expensive. I want to pass the mic to Amy and KZ and Luis jump in. But Amy, I know you're probably you're looking at this because you live in this world probably full time in both these situations, right?
Yeah, yeah, for
So
sure.
so maybe give us a little color from your perspective.
Yeah, the only thing similar about DSCR loans and hard money loans is that they're typically private money, right? So it's a debt fund or somebody. It's not, you know, now I will say, like, if you were going to go get a multifamily apartment complex, and even if it's 5 units or above and you're doing Fannie Mae, they are going to look at your DSCR, like the coverage ratio
That's a
is.
factor.
But it doesn't mean it's a DSCR loan. So typically DSCR loans were you kind of remember those no doc loans back in the day where they like were like, you know, you didn't have to show, you didn't have to prove income. They didn't, and kind of similar situation, the fact that they're relying on the property. That's what that means. They're relying on the property and the property's ability to generate income, and that's what they're basing the loan on. Hard money, kind of same thing, but generally it was based on an ARV. So they're basing that loan on what is the after repair, and we're going to give you money up to 70% of that or 60% of that or whatever it is they're going to give you money for. But it's based, both of those are similar in the fact that they're basing it on the property's ability to generate income or value, but they're just going about it different ways. But DSCR doesn't necessarily need to be a loan product in itself. It is your debt service coverage ratio. If you're going to go buy a multifamily or commercial product or anything, every bank is going to look at it. They're going to want you to tell them what your DSCR is. And, you know, and if it's 1.25, and good on you, Anaje, for they must love you if they're giving you at 1.1. But I
I
remember,
know. I'm feeling pretty good. I feel a little special, right?
yeah, I mean, that's great. Yeah, for sure. They need to sell you some money. But I think it could be because they expect you that your ratio, whatever pro forma you showed them, that your DSCR is going to get better, obviously, right? So maybe walk it
Yeah, we got
in.
two underperforming properties in the
Right.
mix.
So
Yes.
it is what it is. And I think sometimes people, and I've done loans back in the day where my DSCR was below one. Initially, like walking in, it was below, told them on the business plan and what we were going to do, and it was going to be up above 1.25 within a year and a half. And so they were okay with it. But yeah, it's definitely, there are definitely different types of products and different types of lenders. Like a hard money lender, some of them might do asset based lending or a DSCR kind of loans. A lot of them don't. They like to stick to their lane, because the DSCR loans typically tend to be longer terms. Like hard money, you're in and you're out. Like they're going to make you pay points up front, 2 to 3 points up front. They want you to, they're going to have a balloon payment in usually 12 months. They want you to get the hell out of the loan because at the end of the day,
It's risky if you stay in there longer than 12 months because more than likely you're going to default.
It's risky
But
for
they
both sides, right?
it's risky for both sides. I mean, it really becomes painful for someone unless they just bought the property at a song and it was like, almost free, and you bought it and you got a hard money loan to cover it because you didn't have any cash and you were able to get it done. But still, they're just really expensive, and typically they make your life miserable with the amount of stuff that they charge you. I mean, that's how they make their money. They make their money on fees. That's how they make their money. Yes, they'll make money on the interest, but they really make money on the fees. And that's what they like to do. They like to turn and burn those loans because that's how they make their money. So they want you to get the hell out so they can turn around and charge somebody 3 points on the next amount of money that they recycle, right? So
Yeah, and one thing I want to go back to, and we got some more friends on the stage. One thing I want to go back to is a point you made that I think is really important. For me, I actually never really heard of the DSCR loan like as a noun until like 5 or 6 years ago, right? It was always to me, I always defined it as a attribute on how they determine the
right.
criteria of whether they're going to loan this or not, right? And I think Amy kind of put that out there a little bit, right? You kind of the people use this a little bit two different ways, right? People use it as essentially, if this is an income producing property, DSCR is going to be a factor that the banks use. That's one. Like, and that's going to be multifamily, commercial, strip centers, right? Like they in the commercial world, in the income producing property world, this is more of a factor, right? Whereas I think recently, I think people have been marketing like, oh, this is a DSCR loan. And I actually consider it a little bit recent, like maybe the last 5 or 6 years. So I like to kind of make that distinction that one of them is for sure a loan, right? The hard money is a loan. The other one can be a loan or also just an important factor. And so for me, I think it's just important for everybody that wants to be an investor or is an investor at some point. You may never need to use a hard money loan, right? There's a lot of ways to avoid using hard money, but you really can't afford, or you really can't avoid DSCR as a concept, right? It's important to understand it as a concept because I think that's going to be around, like wherever lane you find yourself in the income producing world. It's going to be difficult not to understand DSCR as far as what it means. So anyway, let's pause right there. We got a couple more people to the stage. KZ, Fred, D, Gilbert, John, any one of y'all feel free to jump in and continue the conversation. I seen KZ been up here for a minute. What's up, brother? I don't know if you're around to share with the people.
Man, I'm just glad you got these rooms again. Oh,
I appreciate you know, man, you were one of you RB you was the first one to hit me like, where you at, OJ? Where you at, man? You were one of the first ones to consistently like, man, you got to come on back. So and of course RB kicked me in the butt as well. So we're gonna try this thing out. Real estate. This is the real estate rush hour, guys. Monday, 6 p.m. Central, 7 p.m. Eastern Standard Time. We're going to go for 1 hour, and it's the rush hour. We're going to go hard and heavy on a specific topic. If you got any specific topic that you want to know, this is a teaching space, first and foremost. Let me be real clear for anybody who don't remember how I used to host rooms. Anybody can come on our stage. Anybody can come ask a question. The only rule I have is if you come with a statement, you better bring it because my mods are dope. Okay, so you better bring it. The green badge don't go to everybody in my room, right? If you show your worth and I don't care if you got a bunch of followers or not, if you know what you're talking about, cool, we got you. We got your green badge. But if you don't, you know what? We'll call you out and you might get clowned. And that's not no shade. We love factual information. My man Luis, you there? As my man Luis used to always say, and I stole it, and I always give him credit.
what up?
What up, what up, what up, Luis? Introduce yourself to the people. And as we like to tell the people, we want to write it down, and I'm gonna let you finish the rest.
Research and apply, baby. Write it down, research and apply. What's up,
Yeah, that
everybody?
don't mean listen to everything we say. That means write it down, research, and apply. Luis, my man, well, introduce yourself to the people. You've been sitting on the stage, one of my OG brothers. What's up?
Lisa Estrella,
That
vertically
house look dope, by
integrated
the way,
real
bro.
estate broker.
Hey, that house look
Huh?
dope, by the way.
Thank you, bro. um, but for those of you who don't know, my name is Luis Estrella. I'm a licensed real estate broker in New York and New Jersey and Dominican Republic. I also knee deep in this lending space now, man. Got my MLO license and all that. So I'm moving and grooving, bro. Trying to help as many people as possible in as many different verticals as possible. And getting into this investment space too, man. So we out here.
Out here, we out here. Okay, we moving around. What's up, Fred, D, John, Gilbert? What's up? Who's around?
Well, good evening, everyone. Hey, Gilbert, I saw you unmiked as well. Just wanted to quickly say hello. Sorry, I was a little late getting in the
No
room,
worries.
but
We
couldn't
let
wait to
ladies
get
first
here.
anyway. You good?
All righty, guys. I'm Donna Page, long-term buy and hold investor. Also do some private lending. Just excited. I'm a teacher, coach, mentor. Excited to be here on stage with my friends. Looking forward to the conversation.
What's up? Okay, we're gonna get back to that lending piece because it sounds like D Page participates in what Amy was talking about as far as being private money. And low key, I haven't participated in this space, but little birdies always tell me the most profitable place in the industry is actually being the lender themselves, right? Where you're actually providing private money as a hard money loan situation. A lot of hard money loan companies are truly private lenders. You can start a fund, like what Amy was talking about. All of us in here could start a fund, and this is, I'm assuming this is what D is part of, or she has her own company. But you can start a fund where you collect capital from your friends that know what they're doing in real estate, that maybe have some money and want a higher return, and you can go lend that out as hard money to newbie investors, right? And it's a sounds a little bit dangerous space, but it can be very, very profitable if you do it right. I know Mr. Gilbert got I know we got a mutual acquaintance that runs a pretty large one down here in Houston. What's up, Gilbert? I know you use hard money loans and stuff all the time because you building up stuff. What's going on with you?
Oh yeah, absolutely. What's going on to everybody? Great room again, great topic. One of the things I'll say, I've used a bunch of hard money. I've used conventional banks, but one thing people need to be cautioned of, I'm sure you guys have touched on it. If you use hard money, the most important thing is to have your exit lined up, because the worst thing you can do when you get into these hard money loans is, find yourself in the loan longer than you're supposed to be. I'll tell you one of the tricks of the trade when you get with these new hard money lenders or different lenders. They're always going to try to position themselves to be ahead of you in the equity battle. But one of the things you can do is, just have your exit lined up. I'll share with you guys a hard money lender I've used in the past. They're West Houston Management, and our first deal we did together, they were new to this space, and one of the things I did that was kind of unique to them, I was in and out of their 9-month loan in 3 months. And so at the end of it, they were very honest with me and told
They
me,
ain't
hey,
like that.
no, they didn't. And they were like, we'll be honest with you, we didn't make the kind of money we thought we'd make in this loan. We need to blah, 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 talk again. Because one of the unique things about them, Anashi already touched on it, with hard money loans, Amy touched on it too, they make money in fees. And so one of the things that was important to me with hard money I was dealing with was I wasn't trying to pay origination fees. I'm like, I don't care what you charge me in interest, charge me a higher interest rate. But they didn't know what I knew, that I was going to be in and out of the loan quick. I was going to build fast, faster than they expected. So those double digit interest numbers didn't scare me because I knew the interest is annualized anyway. So, fine, charge me 15% interest. I'll be done in 3 months anyway with no money up front, no origination point. So, there are lenders that do that type of thing. So seek those out if you can. If you know your exit is going to be in and out, again, don't get stuck in those types of loans for a long time. But these are interesting products that are available to try to help everyone level up.
Hey Gilbert, it's always great when you're a contractor, right? You can get in and out on those damn things in a hurry. You already got the subs and you got everything kind of set up. No, those are great. I will also say the cool thing on some of the hard money lenders is you look at their payment terms, because sometimes you might not have to make your first payment until 60 days after the loan originates. And that's like, if you are on it, you can almost, especially if it's not a heavy flip, you can get in and get out of a loan without even you know, without even making a payment, if you know what you're doing. Just saying. I did that. I made it one time. I always tell people I could do it. I made it one time out of
Yeah,
like, I don't know, the 15 flips I did. Like I made
my
it one
last
time.
flip was like that. They basically set it, and again, it depends on loan type. It depends on your portfolio and their belief in you and this, that, and the other, whatever. And frankly, straight up negotiation. I think Gilbert kind of alluded to that, and I want to dig into that piece a little bit, Amy, is that these things are negotiable, right?
Hmm.
They may have their standard terms, but you mentioned that one. That was a situation where, much like Gilbert, I was not down with a bunch of fees because I'm a speed demon. Anybody know me? I'm fast. I push my guys hard. We pre-plan our projects very well. Meaning like I have a lot of my normal clothes. So my last flip, which I don't do a lot of flips. Ellis, you better come up here. Stop sneaking in these rooms and not coming up here, bro. Um,
Amen. There he is.
don't, don't be sneaking in these rooms, Ellis. But anyway, man, my man Dave D. We got some hitters on the stage. But my last deal was very similar. And again, I don't do a lot of flips, but I wanted to negotiate hard on fees. I don't like the upfront fees. I'm not paying 3 points, guys. I got too much experience. Be out here trying to pay 2.5, 3 points. I have a real problem with it. Just ego, whatever you want to call it, right? I'm not doing it. But what they did offer me was they offered me to pay all of my interest. Like they offered no payment for the first 6 months, and as long as I got out in 6 months, it was a balloon. But they really wanted that whole 6 months though, right? Much like Gilbert, they didn't want me out in 3, they wanted me out in 6, not 5 but 6. Right now we had it on the market in 2.5 months, and were able to close in 5. So they were okay, but they were very shocked that we were on the market in 2.5 months. But the point is that there are situations I didn't really pay anything, and what was even cooler about it was that we did that loan with a cross collateralization. That's why they offered that to me, to not owe anything. So they collateralized another property that was free and clear. So essentially, I was able to get in and out of this deal, made about 35K on the flip, and never had any money out of my pocket, essentially, right? And one of the reasons, and I'm gonna pass this around a little bit, John. I'm hopefully if you're available, that's cool. If not, that's cool as well. I know you said you got your kids and whatnot, but one of the things I wanted to educate, and again, this is the real estate rush hour, so we're gonna rush this thing. We're hot and heavy on the information, just so people can know this will get posted to my YouTube page. Last week's is already posted. So to my mods, if y'all didn't know, if you're on YouTube, go ahead and send me a collaboration or send me a note and we can collaborate. And all of these will be posted on YouTube. And anybody with pages, we can collaborate as well. These my relaunch or launch of Wealth Masterminds Academy is now on School. And again, for Black Friday, it is actually free to enter, and we got some free classes in there, straight up. So hey, go ahead, hit the link up at the top. It's free to enter. Now there's some advanced classes that gonna cost you some money, and if you want a premium, if you want a premium membership, that'll cost you some money. But if you just want to come kick it and hang around and make sure that you are up to date on information, we got our calendar. All of these events are posted on the calendar, one master calendar. If you are a real estate person that has events, send them to me and we'll post them on our calendar inside our Skool community as well. This is a community. Part of the reason for me coming back to Clubhouse is to be able to get all of my friends that I miss. I miss all of these people on stage. I haven't talked to in a long time. And so I wanted to make sure that we're staying in constant contact, whether you're on certain apps or not. We can at least have one space that we can kick it in. And again, even if you're not a mod, if you're just somebody, introduce yourself. Part of the community is we want to be able to do deals nationwide, not just me, but all of our friends who are vetted people, right? So if you're down there, you're a realtor somewhere in DC or wherever you are, come in the community, Tell us who you are, tell us where you work, and tell us what you do, so we have some friends that we know what's up. If we This is how we get, that's how we all make money together. That's what it's all about. So with that being said, that's my shameless plug for the second. John, if you're there, please jump in. Otherwise, I'll pass my mic to Dave D, who I'm sure is jumping at the bit to talk about this subject.
Hey, hey,
Dave's
Onaje,
finna
can I
bounce
say
out.
something?
Come on, Dave. Of course you can say something.
Here's a quote. Let them know that when you mention cross collateralization, that if they don't know what they're doing, let them know about the risk factor on that
Well,
as well, because they're
you
pledging
tell
it
us
to the
about the.
property as
No, you're
well.
absolutely right. There's a massive risk to that, right? And it was actually a massive risk, but obviously I've been around for a little bit and I got a lot of faith in myself. But tell the people why that could be a bad thing, right? How could I have screwed up that situation?
Well, if he didn't perform in the 6 months' time and he had a balloon payment, that means both properties are up for foreclosure. Not the one property that you borrowed from, but both properties. I mean, cross collateralization is great if you know what you're doing. But if you don't and you get a hiccup and you negotiated bad terms, you have risking and losing both properties.
Yeah, that's one of the risks. One of the other risks is that, to be honest, I'll be very frank with you, you run the risk of not getting full value of the paid off property or the property that they're collateralizing, right? Meaning, let's say you're using cross collateralization to buy your first multifamily. Let's say you got a property worth 100 grand. Well, let's say you got a property worth 300 grand, and your first multifamily property is worth 500 grand. And you say, hey, I don't want to get another loan. I'm gonna cross collateralize that. Well, in theory, you should be able to get about 240,000 in a cash out refi for that property. But maybe the $500,000 property, you only need $100,000 down. So you've essentially devalue that property or devalue that money in that property, if that makes sense. Meaning you use more money than what you needed for the future down payment. That for me is one of the hidden risks to using cross collateralization is that the bank is going to they're taking hold. Come on in here, Amy. Help me out. I see you. I see you.
Yeah, I'm like, okay. So I'm trying to understand. So did you just take like a home equity line out and use that to buy the other property,
That would have
or
been a
did you
proper
actually
way.
yeah, okay. So you offered it up as security, but did you have debt on property A that you used for property B? Because
I
if you
did
had debt on
no,
property
I
A,
had
your
no debt.
lender.
I had no debt.
Oh, okay.
Yeah.
Well, that's the other thing. You can't do it if you have debt on property A. Let's just so y'all know, because the lender's gonna care if somebody's gonna put a lien on property A, even if it's a second lien. The first lien might not let you. So just so you know, if you're gonna cross collateralize, you got to make sure the other one's free and clear. So
Yeah, and the
yeah,
bank ain't gonna roll with it either, right?
yeah, yeah.
And like I said, it is a risky proposition.
Mm-hmm.
Typically, honestly, I was being lazy, right? Like I'll just be if we
That's
it's a
so
lazy man's
funny.
move, right?
It is. Well, it is, right? I mean, because you have, well, after a while, when you've got like 10 to 12 houses, sometimes you're like, well, those are assets that I could use to go do deals with. And
Save some
lenders love
fees
that stuff.
potentially, and you know what?
Yeah,
It's lazy, but it's also a way for me to save on closings and stuff like that, right? Where
right.
I don't have to close over here to do that over there, and
I know.
maybe yeah, so there's some benefits of like, and let's be honest, it's hard to get HELOCs on investment property, right?
No, it
And it's
is
just
for sure. Yeah,
come
it
on in here,
is.
John. If I don't know if
Call
you're
me,
available, John, but John
call
just
me,
put.
Man, we got HELOCs on investments. What we talking about right
yeah,
now?
call me. We
Who
got
got some
HELOCs.
HELOCs on investments? Where that money at, y'all?
Come on,
I got
baby.
it. I got it right here. I have HELOCs for investment
What you
properties.
talking about, Dave?
I got to get. They just sent me the schematics on it just last week. For, no,
Man,
no,
we
no,
need
no,
bullets
no,
in the
no, no, no,
gun.
no. Well, you got to remember,
I'm joking.
a lot of people want it.
I'm
They,
joking.
a
We
lot of
need
people want
bullets in the
it.
gun. Maybe we come back next week and you tell us
I
about it.
will. I'll come back and I'll pull up because not a lot of people is in that position anyway to get the because they still got to have good credit. So if you
No,
got
but that's
Jokey, yeah. Go
It's a
ahead.
very good product, right? I mean, Amy been around a long time. It's these are
Yeah.
difficult. It is a good product. If you can get a HELOC on investment property, I think that's a very, I mean, that's one of my unicorn products. To be honest with you, you don't see them often.
No, and usually people, what you did is once you had, like, say you had six houses or seven houses or whatever, you would use the assets in a way like you would go get a blanket loan, right? And then
That's what
take out your
that's what I'm doing
debt.
now. Yeah, that's my
Yeah.
1.1.
Yeah,
Yeah.
yeah, exactly. And so then you've got because you've got a lot of cash that you can use to do deals with, and like, and save your cash. I think what a lot of people make mistakes on is when they start real estate investing, they become real estate rich and cash poor. And that's never a good situation when you're trying to get debt. So you need to like, I know it's enticing. I know you're trying to go chase that deal, but don't sink all your money into it because you need to have cash. You have to have cash.
Yeah, guys, that's
Um,
a gem. That's a gem. I'm gonna stop you right there because when I hear gems, I'll stop people, and I'm gonna say this again. I'm gonna reiterate it. My man Gilbert dropped 100 on there. Look, this is serious, particularly right now as the market ain't all that great. We know the market isn't great, regardless of what we hear. Right? Look, cash, it always counts. Cash is king. Cash is absolutely king when rates are high, right?
mhm.
You got some famous guys out there calling cash trash. They ain't talking that crap right now, are they, Amy? Like
They are not. Well,
they not talking that mess.
yeah, because loans became cash. I mean, there were interest rates were so damn low. It was just like you're borrowing and nothing. Like it was insane. And it was, yeah, for
Money was
sure.
on
Yeah.
sale, right? Money was on sale. So Tamala said, "Hey, Tamala, we were kind of talking about that. I want to be clear that we slow down a little bit." Tamala's asking a very key point, which we were just discussing. Can you get a HELOC on a second home? The answer is yes, but that's a unicorn product, meaning it's very rare and it's very scarce. In my experience, it's not normal. You're going to have to do some calling. You're going to have to hunt for it. It's not the type of product that every lender is going to offer. Matter of fact, I would argue that most lenders don't offer this. In my experience, I'm sure people will say that they got it. Like my man Dave said, he got it, but he ain't had his bullets in his gun. He go. That's my point, right? They don't, it's a product that's not very common, and the few lenders that do it, they don't do it all the time. So if you can find one, it's, in my opinion, beautiful. I love to have it, right? Or I'll tell you about my first line of credit on investment property. It was only a year long, which kind of sucks, right? That's a dangerous loan, absolutely, right? It had a year term. It was a HELOC for a year term on investment property. I was kind of too green to know that that was actually a bad situation. But anyway, that's my 2 cents on that.
Have you worked to get and some of these are depending on how, so as you build your assets up, right? And you have significant amount, like, so say y'all, like, look, if you've got five homes that are 200,000 worth, maybe they're 400,000 and they've only got $200,000 in debt on them, you're a millionaire, right? Because you've got a net worth of like $1 million, which you can then sometimes use for lines of credit. And I haven't seen the product yet, Anaji. I know they talked about it a couple of years ago. I've kind of moved over into the commercial space, so I do a lot of different things. But I used to have business lines of credit, like, and that would help you during, when you're having to put earnest money deposits down, you're trying to get stuff down on deals, you're trying to get through your flips and your turns and all these other different things. You necessarily don't want to go buy real estate with them because it's higher interest rate, but I'm just wondering if that product still exists. I don't even know. Does it?
Yeah, the business credit space is actually quite robust. I just tell people I tell people just make sure you have a high level of discernment before you start shopping for business line of credit. Some people kind of view business line of credit as like, oh, I got you this Home Depot card. We're not talking about that.
Oh yeah. No,
we,
I'm
we
thinking I had one with my bank. I had one with Chase.
Yes, me
So
too.
that
Me
was
too.
it. Yeah.
Yes,
Okay.
yeah. That's
Yeah.
that's a real one, right? Where you
Yeah.
have one with your bank. They actually pull your information. They're probably going to pull your personal financial statement, even though you may not be a personal guarantee, right?
Right.
When you get in the real space, because the guys online will tell you, well, you don't have to pull your personal credit. They'll give you all this money for free. Not no real ones, y'all. Not no good stuff.
Yeah,
Like,
no.
we got to stop with the capping, right? Like the good stuff ain't. You're gonna have to put. You're gonna have to show what you got. Now you may not have to do a personal guarantee, right, where your name is not actually tied to the property, but they want to know who you are, right? Like they need to know who you are, what you got going on. Are you safe? Are you getting this loan because you robbing Peter to pay Paul? That kind of situation, right? But it's out here, and again, loan types can be confusing. And for me, I do think it's important for investors to know you got to have a lot of bullets in your gun. You got to have a lot of options to be able to execute situations, right? Wish Courtney was still here. She's got a lot of bullets in the gun in the creative finance space, right? She knows how to close deals without loans. But that's just only one part of it, right? There's going to be situations where, you know what? A lot of us, and I really want to dig into this. Amy and Gilbert did 100, and anybody can jump on this. I'd love to hear Donna Page talk about this for a little bit. We're going to spend the last few minutes on this part. You can be real estate wealthy, but be cash poor. And that can be a dangerous position. That can lead to, I've seen a lot of people buy a lot of real estate really, really quickly, and they deplete their cash, and and then a lot of stuff go bad. Tenants don't pay, repair unexpected repairs, right? Between repairs and tenant not paying and the long-term evictions, and you not understanding how to actually properly manage property, these things can add up on you, and they can add up fast, right? And that's why we want to focus on some of these more things that we skip over, right? It's important not to skip over understanding loans. It really is. And that may not sound sexy because it's math and it's these crazy terminologies or whatnot. But let me say something else. We got a couple of our lender friends on the stage, but I'm gonna say something that's real. A lender can absolutely be predatory. A lender can absolutely be unsavory and try to steal from you. They Many lenders, they're in the game to steal your equity. They use you to go find a great deal. Maybe you've taken someone's awesome wholesaling class and you know how to get properties at 30 cents on the dollar, 40% on the dollar. They know their math, and they want that equity. They want that equity that you worked hard for, and they're going to take it if you're ignorant and you don't understand. And when I say ignorant, I mean lack of knowledge, right? If you don't understand how they can take the terms that you're reading, don't be looking at all 100 grand ain't the same. Well, they're gonna give me 100 grand. So what? How much does money cost? Because money does cost money. Okay. What say y'all? I saw everybody gave me a little love. Come on in, Don.
Just
Come on in.
Onaje, I cannot stress enough. I mean, I think you did a really good job of explaining why it's important, but we really have to drive home the point that reserves are critical. If you're going to be a professional in this field, if you are going to be a true investor and a savvy housing provider, you have to have reserves. As you mentioned, there are things like natural disasters that are happening all over the country. Things like a furnace going out, that could be 15, $20,000 depending upon where you are in the world. And if you don't have the money or have the credit, you SOL, right? Or if there's any legal issues that may arise. I can tell you over the last maybe 18 months or so, we've seen people, unfortunately get in a lot of trouble because they were able to get into properties really for not a lot of money, right? The interest rates were low. People were able to do a lot of creative stuff and had a lot of weird money floating around. So, people gathered these properties, but as things, life has happened, we had, natural disasters, all kinds of things that are happening. And they're kind of stuck with their pants down. So I hope that the people in this community are really careful as they are buying and as they are managing their portfolio, understanding that we have to keep a nice solid cushion aside. So that was my point.
And I wanted
Exactly.
to to add to that, just like there's different types of reserves. Like you have your lease up reserve that's covering your the rent you're not getting while you're trying to get rented. You have your operating reserve, and then also too a repair reserve per unit. In my market is typically $300 per unit. So just understanding the reserves and then like the different facets of operation that you're reserving for.
I
Yeah, and
think
if
you
your
guys are
property,
really. Oh,
go
go
ahead.
ahead, Amy. Go
I
ahead.
was just going to say the age of the property, the higher the reserves, especially on the maintenance. So you just need to make sure if your property's older, like 70s, 80s product, you have to have more in reserves. You're going to have higher maintenance costs. But the bigger thing too is insurance, man. It does not slow down. And I don't know anybody budgeting 3x on their reinsurance premiums, but it's insane in the membrane. That's for sure. Go ahead, Gilbert.
No, I was just going to piggyback off what you ladies have said already. It's just that the importance of reserves is like so huge. I think, and I've noticed this personally. I'm sure other people have. When you look at social media, I think it's a good thing in some aspects. People are driving the importance of ownership, and that's cool, right? To own real estate. Uh, but we glorify too much just getting to a closing table. And I think that's why I appreciate communities like this one is because you guys understand sustainability of ownership, right? That's more important than just closing a deal and you take over a deed. But wealth is built over time with ownership, and I think that's where the Instagram world and the social media world just doesn't have enough of an emphasis and focus. That's why I appreciate this group, and for people that are listening in the audience, that's why you want to, become a member and just really tap in because more important than, the flashy champagne bottle celebrations at closing table, it's all about sustainability, having your reserves being ready. One of the comments I was going to make about DSCR loans too, you want to be careful of. It's not just with DSCR loans, but other loan types too. The prepayment penalties, the step downs and step ups. You want to be careful of those too because they'll give you a more
Don't
attractive
just
rate.
sign that, y'all. Hey, do
Yep.
not just sign these random prepayment penalties.
Yeah, I'll let you go into it, but
Hey,
that's
because
what I
I
wanted to.
just dealt with it. Of course, they offered me a 5 4 3 2 1 to start, and I immediately said, I ain't even talking to y'all unless we even start. We're not even starting with that. We not even playing that game. And what's a step down? Let's just make sure I think everybody agrees with me on that. But a step down on these type of loans, let's say a DSCR loan, right? Or something similar or commercial property, they want to make a certain amount of interest on you. Now, a step down is not going to be in a hard money loan situation because that's temporary financing. But you're absolutely going to see a step down in a long-term commercial type of situation. And what that is that's the lender's version of guaranteeing that they make a certain amount of interest on this loan. Now, what is it? Oh yeah, they tried to get me, but you ain't get. Hey, bro, no, this ain't my first rodeo. They tried to get me for sure. But a step down is like a 5 4 3 2 1 is you would have to pay 5 points if you sold that property within the first year, 4 points in the second year, 3 2 1. And so the idea is that you stay in this loan paying this interest that frankly likely is higher than the average, right? It's probably going to be prime plus 1 2 or something like that, something a little bit higher than what you could get traditionally. They know their product isn't great. That's why they're offering you this step down, right? That's why they want to give you this step down. They want to try to catch you slipping, right? And again, a step down can be quite expensive, right? Because here's the other piece. Let me be real clear. You can mess around and get offered, oh, we'll give you all this money, and you're looking at this 150 grand cash out refi that you're getting, and you're like, oh, I need that 150, right? I'm looking at I'm looking at that right now, right? And they're gonna be like, yeah, it's 3 points and a 5 4 3 2 1 step down. What they're really saying is if you use this debt and don't like this debt because interest rates might get cheaper in the next 6 months and refinance out of it, you paid 3 points to close and 5 points to sell to refinance, just on a simple refinance, not including refinance fees. That's 8 points in the first year. That's a lot. That's a lot.
For sure. I'm gonna channel my inner RB. It's an hour, Anaje. It is 7:02.
Well, you are right, and she's not here to police. So I guess y'all just gonna all police me. That's what's up. Well, before I jump off, y'all must really know I'm long winded.
Yeah, we know you,
Y'all do
Anaje.
know
We
me.
know
I
you.
appreciate that. But
Yeah,
before we
but
go off,
before, but yeah, can
I
I
do.
promote my room, by the way, when you
Of
get a
course, you
chance?
can. Yes, you
Yes. All
can.
right. Okay. You go. You want me to go or you go? All right. So Sundays at 9 a.m. Look for me. So I chair the U.S. PropTech Council, which is the trade association for the real estate technology industry in the United States. We have a room every Sunday morning at 9 a.m. where we're talking about the latest in technology. I will say it's in the Creative Birth Strategies house. So look for me there, but we talk about AI, we talk about all sorts of different things. But on this topic specifically on insurance costs, technology can save your butt. So if y'all are not putting in leak detection and fire prevention and all of these simple things that might cost you $1,000 to save you 20% on your insurance, you are missing out, man. So I would totally, come to my room. I'll kind of give you those lowdowns or just look them online. Like there's lots of water leak detection folks. But I just wanted to put that out there. Thank you, Anaje.
No, for sure, guys. Like Amy's a wealth of knowledge, particularly in the prop tech space. She's been talking prop tech since I've met her, so definitely follow her in that space. And technology is real, yo. Like that's the difference when you really get into these DSCR situations, net operating income. That's the difference between good operators and the ones that don't necessarily make it these days is actually technology. So, with that being said, my homegirl Brandy just jumped in and out of the room. I was gonna give her such an alley oop, and she's not here, so y'all can just tell her I gave her alley oop next time you see her. But Brandy's OG, original, one of the original founders for the Wealth Masterminds Academy. Her classes are still up. She's a phenomenal lender. She's actually one of the few people that I actually let do a class in the space. But she's there, and her class is actually the basis of this room, right? So it's a deep dive. So go ahead and jump in. If you jump in early, not only do we have our real estate turning houses into cash machines, that's our free class. But if you come in and all you got to do is participate, all you got to do is come in, kick it, participate, and your points will go up. And if you get a certain amount of points, you get to unlock some other classes for free. Who's offering that in their community, right? Some of these classes we offer and other people charge thousands of dollars. We're just legitimately trying to bring all of our friends that we miss back together for a little bit. And again, the clock is ticking. What's up, Ron? Miss Sharon, what's going on? I'll get a little quick shout out real quick before we close this thing out. Okay, they ain't saying nothing. The room, first of all, the easiest way to
I
find the
thought you
room
was
is
giving
just,
a shout out. My bad.
oh, I'm giving a shout out to you. What's up? What's up?
Say
How you
hi.
doing? Tell the
Good
people about
evening,
yourself real
everybody.
quick.
No, no, go ahead. You got it. I'm. You about to close
Okay,
out?
okay. I was just saying hello, man. We
my
ain't seen
my
people in a long time.
apologies for being later, Najee.
You all good. You all good. Join the club up top. The link to the top. Miss Sharon, what's going on? We see you all the time. But hey, we're coming back. Real estate rush hour Mondays at 6 p.m. Central. Instead of the replays just being posted, we're also posting to YouTube. Pretty cool. It'll be posted within 24 hours on YouTube. This same post. So if you are on YouTube, if you're somebody that has a YouTube channel, hit me up and ask for collaboration. Now, don't ask for collaboration if you ain't participating in the conversation, but that's what we're doing in the future. And I just want to shout out to a lot of people that I have seen. I'm looking in the audience. I see you guys in the audience. A lot of y'all been rocking with me for a long time. If you got a red badge, that means you got to join the community up top. Follow all of the mods on the stage. These are people who are dope in what they do. I don't give out green badges to anybody just because I've heard you say something cool in the past and you probably know what you're talking about. So that's why I rock with you and whatnot. Um, But I want to just give a quick shout out to people who have been steady eddies for day one Clubhouse OGs, Miss Tamla, Diane, Joe T, our niece, I've seen you, Ann, Lena, Brenda, what's going on? I see you, Miss Jackie. We holler all the time. Lisa, Ava, I see you. Larry, I see you. Been lurking forever. Jeremiah, I see you. Jeremiah, I see you. Anthony, Anthony, I see you for a long time as well. Tamerica, come on now. She's seen us. She's been to game day multiple times. Fred, what's up? William, Margaret. I seen y'all. So hey, shout out. Appreciate the love as always. Again, this community is not going to be complimentary long term, and it's not 100% complimentary. You do have to do an upgrade to get all of the classes. But once you come in, you can actually literally see. We got like 12, 14 classes up here because I got a whole lot of information, and people know that I'm long winded. That means I go in and I go in hard, right? Or my people who are rocking with me go in and go hard. If you are a mod and don't have the time to be starting all this coaching mess up or whatever, come holler at me, right? And we can put your class into the community as well. And in about a couple weeks, give me about 2 weeks, we will be giving out, not giving, sharing, because this is a community, not a Onaje Barnes show. That's why we call them Wealth Masterminds Academy and not Onaje Barnes Coaching School, right? We will be sharing a 40, I said this again, a 40% affiliate link. And that's why we moved over to School, because the payouts are automatic. You ain't gotta hunt me down for the payment. Where's my payment at? Whatever. It is automatic. The affiliate links goes to all members, whether you're paid or not paid. If you refer this out and someone joins and participates and buy Donna Page's dope school, I'm just calling it out, but someone else's class or my class or whatever it is, we will participate. That is how a true community works. We all share in the situation. So that means when I log off, I should be seeing a whole bunch of people asking to get in, and I'm gonna approve you shortly. With that being said, come check us out. If you've heard somebody say something cool, give them some social currency and give them a follow, not just here, but also on their other social media channels. With that being said, we're gonna go ahead and end this room because I promised, and Amy just kicked me in the butt about just having 1 hour. So we're gonna go ahead and end the real estate rush hour because it is just supposed to be 1 hour. And I will also tell you, if you have a topic, and I want to shout out to Miss Joe T, who is a faithful member in the Wealth Masterminds Academy, along with Miss Sharon. This is actually Joe T's topic of today. So if you want a particular topic because you want to learn something, and I will be your curator and find some dope people to share the stage and share their knowledge with you about your question. Or you can just come on stage next week. But if you got a question that's burning and you can't wait, come in the community and drop the question, and maybe we'll host a room about your question like we did with Joe today. So shout out to Joe T. Holla, y'all.
Have a happy Thanksgiving, everyone.
Yes, thank you. I forgot that. Please make sure y'all remember. Oh, yes. Happy Thanksgiving. And I have to say this every year because I just told you I was in the room, but I'm not, because I want to say this point. Not only take a moment to be thankful and find the things, even if life is giving you a lot of dark shadows right now, there is something out there to be thankful for. We are here sharing a space with each other, being able to have a conversation with someone else and learn from them. That's a human thing. That's an amazing part of humanity, to be able to share ideas, absorb those ideas, and take them on as part of you. That is a sharing of whatever you want to call it, whatever your religion, whatever your thing is, right? I cherish the ability to not just share what I have to give, but also share for what you have to give. So relishing that for the week. Hopefully that's a little thought. And also, if you're at Thanksgiving table, right, and you're having a conversation with the family, it's okay to talk finances, y'all. It is okay to talk about money, wealth in the future, right? That's how we move forward as a community, right? You can't be out here hoarding knowledge. We got to get rid of the taboo thing about sharing and talking about finances, right? That's how we will get our loved ones to come up with us. Okay. So with that being said, join the community, follow somebody, and we'll see you next week, 6 p.m. Real Estate Rush Hour.